Hello. Have you ever opened Twitter or YouTube, seen everyone talking about the same stock, the same coin, the same once-in-a-lifetime opportunity, and thought, am I the only idiot not making money right now? Because here's what usually happens. You watch from the sidelines for a week, then 2 weeks. Then one night, usually late, you finally give in. You buy, and almost magically, the trend dies. You're sitting there thinking, wow, I literally bought the top. Yeah, that's not bad luck. That's psychology. We're taught, explicitly or implicitly, that good investors are early into crypto, early into meme stocks, early into the next big thing. But here's what most people don't realize. Being early is rare, being late is common, and being early and right is almost non-existent. A study from Dalbar showed that the average investor underperforms the market by 4 to 5% per year, mostly because of bad timing, buying after hype, selling after fear. That's not a knowledge problem, that's a behavior problem. Let's talk about why trends mess with your head so badly. Humans don't actually crave profits, we crave social proof. When you see millions of people talking about the same asset, your brain doesn't process it as risk, it processes it as safety. Your brain goes, if everyone believes this, I probably won't be wrong alone. This is called external validation, outsourcing confidence to the crowd. And markets? Markets punish that instinct relentlessly. Let me show you how this plays out with real numbers. Let's say you invest $10,000. Scenario A, you chase trends. You gain 40% once, then lose 35%, then gain 25%, then lose 30%. Your average return feels exciting, but mathematically, you end up with less money than you started with. Now look, this is where people get defensive. Some people did make life-changing money, a tiny minority. But here's what most people don't realize. For every viral winner, there are millions of silent losers. They subsidized the gains. Most retail investors bought near the top. They weren't early. They were exit liquidity. This is where it gets really interesting. The best investors you'll never hear about. They don't need to feel smart right now. They rely on internal validation. They ask, does this asset generate cash? Do I understand the downside? Would I hold this if nobody talked about it for 5 years? If the answer is no, they pass. No drama, no explanation, no apology. Now, you might be thinking, if this works, why doesn't everyone do it? Because ignoring trends feels like falling behind. You don't get dopamine, you don't get social approval, you don't get the illusion of progress. But investing isn't about feeling productive. It's about being patient while others self-sabotage. Patience is uncomfortable, but it works. I once met an investor who hadn't changed his strategy in 20 years. Same boring index funds, same boring real estate, same boring schedule. No Twitter, no Discords, no alpha. He wasn't flashy, but he was financially unbothered. That's the goal. Here's the truth nobody markets. Trends transfer money from the impatient to the disciplined. The market doesn't care how smart you feel. It only cares how consistent you are. You don't need more opportunities. You need fewer decisions. Ignore 99% of trends. Protect your capital. Let compounding do the heavy lifting. I'll see you in the next one.